Now, as part of efforts to facilitate the so-called demutualization of the Nairobi Stock Exchange, Kenya's Capital Markets Authority has now released a regulatory framework to govern the process, and it's also opened it up for public comment. Joining us now from our Nairobi studios, Paul Mwai, CEO of African Alliance Kenya Management Company. Thanks so much for your time, Paul. The entire process now up for public submissions. Why is that important?
I think it's important in times that after a very long time, we are actually seeing signs where the legislation that has been put in place is now coming to a point where we can expect to see, hopefully before the end of the year, the final demutualization of the Nairobi Stock Exchange. We've been talking about this for almost the last 5 years, and I think the signs are now, the writing is on the wall that this is finally coming through.
I mean, there have been a few blockages, and I think one of the most pronounced ones was what we saw in April when some stock brokerages were refusing just to comply. Effectively, they're the current owners, and it's them selling off their particular stake. Some issues around capital adequacy being shifted around and how they're going to be reimbursed. What's that all about?
Yes, I think in terms of how they are going to distribute the shares and who's going to get what share goes to government, there was a lot of blockages around that and a lot of conversation that went around about that. I believe that conversation is still on the table, but I think a lot of it has been resolved. And I think we are seeing clear signs that things will begin to go ahead going forward.
All right, it's still a while away. Effectively, demutualization paves the way for the Kenya Stock Exchange or the Nairobi Stock Exchange to list in early 2011. What does it mean when the stock exchange is also a listed entity?
Well, it means that the critical thing here is that you get the separation of the three functions, which is the management, the ownership, and the trading function. And which means now there will be separate shareholders in the stock exchange other than the stock brokers who are the current owners of the stock exchange. It is expected that this will bring greater transparency, greater accountability, and hopefully create a clear separation. It's not clear at the moment whether there will be further restrictions in terms of the ownership of the stock brokers. Right. I think India is a case where we saw stockbrokers being restricted to 49%. We are not sure whether that will happen in Kenya. So we're still waiting to see how that unfolds, but it is a clear sign and it is a beginning of what's expected. For
a new entity, the Nairobi Stock Exchange Incorporated, what about the crisis of public relations? You know, the market is probably one of the worst performing bourses in Africa at the moment. There's been significant depreciation of assets and equity values on the bourse. And that's the sort of environment in which investors are operating in. Why would they want to invest in an NSE-related company?
It's a good question. I think we are hoping that the current slump in the market will change. I mean, the market went through a terrible time when we had a number of stockbrokers effectively going into liquidation and having being pushed out of the market, and some investors losing their money. We've seen a significant change since then. We've seen the Capital Markets Authority crack down on errand brokers, so we've had a fairly good stretch, and we are optimistic. It's probably not the best time, but I think when you look at valuations, they are looking highly undervalued at the moment. We are seeing companies with single-digit PE ratios while still showing significant growth levels. So although it's a bit depressed at the moment, the outlook, I think, for those who have a long-term outlook and are willing to ride through the political wave that comes with the election, there should be a handsome reward.
And finally, obviously, the whole process of demutualization is meant to reinforce Kenya's Vision 2030 to become a middle-income economy by the year 2030. How does demutualization advance that?
I think demutualization enables the stock market to grow because it now becomes a separate entity, and by separating the entities, hopefully there will be greater investment into the stock exchange because it's now a for-profit organization as opposed to a not-for-profit organization. That will enable it to grow and perhaps invest more in terms of of its capacity in terms of its IT network. Hopefully it will also enable better integration with the other markets within the East African region, and probably we might see the Nairobi Stock Exchange acquiring shares in some of the East African stock exchanges that are now coming up quite rapidly.